A lot of news has been going on. Sorry I haven't been on YouTube. I've been a little sick, as you can probably hear in my voice. But one of the things I've been thinking about as I've been watching YouTube channels and listening to the news is how much information is coming at people right now. Banks are failing. Credit Suisse is getting bought out. Janet Yellen speaking on the Hill. Uh, all these things are happening, and they can tend to, at least for me, psych people out. Especially your average person, they watch it and they're like, well, "Okay, what's going on? How do I invest here? How do I react to this?" And that's one of the things I want to talk about. We shouldn't be reactionary, and sometimes I kind of have to center myself on what's important in life, my family, my faith. But the other thing I try to think about is what is certain when it comes to investing. And we're going to have a lot of information coming at us this year and as fiat fails. But one thing that helps me is what is certain. Fiat debasement is 100% certain. Another way of saying that. Inflation is 100% certain. These levels of inflation, not necessarily, but inflation is 100% certain. So if you know that, let me back up. Why do I say that? Because we have so much debt in the system, so much debt in the system, 31 trillion just government debt. If you start tapering that, meaning if you had a bunch of credit cards and all of a sudden your income went down and the number of dollars coming into your bank account went down, all of a sudden that debt would have you'd have a huge problem, right? Because you couldn't finance that debt. The same goes for the United States. As the Fed is taking money out of the system, less taxes are going to the federal government. They have to take on more debt, and this is worldwide. This is a worldwide problem. Okay, so fiat debasement is 100% certain. How fast that happens, that's up for debate. But it being debased is 100% certain. Another thing that's certain to me is that they cannot have panic in this debasement process. One of the problems that you see with these banks is your average person goes, "Wait a second, what? My deposit isn't. I put it in there, it's not there anymore." Like most people don't even know that. That when they are giving money to a bank, they're loaning money to a bank. So a lot of people don't even know that. So they can't have the average person starting to pay attention, as Henry Ford said back in the day. If the average person knew how the banking system worked, there'd be a riot in the streets tomorrow or a revolution in the streets tomorrow. He said that back in the early 20th century. They can't have the average person understand how the banking system works, because if they did, there would be a panic and a run on the banks. So how did they prevent that panic? They changed the rules, and this is the other certainty. This is why I think it's important to understand what your limits are, because fiat debasement is 100% certain. They cannot have panic. Because they can't have panic, they'll change the rules as time goes on. So if you're one of those people that's like, okay, I'm going to think about the silver squeeze, think about the GameStop fiasco, think about in 2008 when they stopped short selling on banks. If there's panic, they change the rules, and that benefits certain people and not others. So if you are basing your investment decisions off of the rules that are currently written, understand that they can change them as time goes on. Meaning, if you're shorting something, um, they can just change the rules and make it illegal to short. They've done it in the past. So for me, that makes life pretty simple. I buy assets that the government can't debase, that the government can't print, and I hold them physically: gold, silver, Bitcoin, and then to some extent real estate. And then when it comes to stock market, commodities. But I'm not trading them. I'm not going out on margin. I'm not using leverage to do this. Mainly, number one, I'm not smart enough to do that. And number two, I think in this volatile world where they change the rules, you can get wiped out fairly quickly. So, as pandemonium sweeps over the economic world or the finance world, I think you can have a little bit like that biggest battle you fight, which is between your ears. You can try to at least stay grounded in the fact of what's 100% certain: fiat debasement. There could be moments in time when they're not debasing or they're trying to fight inflation. But as we are seeing, Jerome Powell trying to fight inflation is leading to massive problems. which the solution to those massive problems is always what? Printing money in one form or another. And you'll hear, no, it's not QE, it's QE. Well, it's just more money in the system. Benefits some and not others. All right, so I want to take a look at this article here that I thought was pretty good, kind of lays it out. So this is from Gold Switzerland. It says the financial system is terminally broken, toast kaput. That I agree with. That is 100% certain. It's toast. Now, it's not good. Like, we do not want an overnight collapse. If you're one of those people that's rooting for that, I don't think you know. You don't know what you don't know. That would be very, very bad for the United States. That would be very, very bad for society. I'm talking pandemonium. Okay. So, reading from the article, anyone who doesn't see what is happening will soon lose a major part of their assets, either through bank failure, currency debasement, or the collapse of the bubble assets like stocks. Now, why I say currency debasement and not bank failure, they can't have bank failures in the United States because one of the key components to the system continuing is that the average person doesn't see it coming because they want everyone to feel like it's okay, because if there is a run on the bank, then the party's over tomorrow. The party's over tomorrow and we have to nationalize the banks. Everyone has a Fed backstop, yada, yada, yada. But I still think even if there is a bank failure, guess what? You know how they solved that? Just like they solved SVB. Printing money and the Fed becoming the backstop and the Treasury becoming the backstop to the banks, aka nationalizing banks. Further reading. Debasement collapse of bubble assets like stocks, property, and bonds by 75 to 100%. Many bonds will become worthless. I don't think property will become worthless because property is a utility. But it is something to keep in mind. Bonds, somebody has to be left holding the bag at the end. And hopefully that's not you. And bonds, short-term bonds are one thing, but like 30-year treasuries, you're going long on the solvency of the United States. And I'm like, not me. Okay. Further reading, the solidity of the banking system is based off of confidence, as I've said many times. And confidence is such a fleeting thing. It's hard to earn, easy to lose. With the fractional banking system, highly leveraged banks only have a fraction of the money available for all depositors. Deposits ask for so all depositors, if they ask for their money back. So when confidence evaporates, so do the balance sheets of banks, and depositors realize that the whole system is just a black hole. And I've said this multiple times. It doesn't have to be a run on the bank because people are worried about bank solvency. It could be that they lose a certain amount of their deposits because of a recession, right? People need the money, which is what happened with SVB, by the way. There was a lot of tech companies who actually needed liquidity. Therefore, it wasn't a run on the bank, but they went to the bank. And then people started to notice, hey, they have some solvency issues. So these banks are loaning out 95% or $9 for every $1 they hold. So if enough people during a recession go, hey, I need my money back because I'm having liquidity issues in my own life, how do these banks provide that liquidity? The answer is they don't. And then they run to Daddy Fed to bail them out. So your average person isn't there yet. They don't understand how the banking system works. And if you talk to them, if you talk to your friends, and they go, you try to warn them, you see the look on their face. Like, please stop talking to me about this. This is boring. I don't want to listen. And they need those people to be ignorant. They need those people to not panic. Because if they panic, it's over overnight. So they want to keep this can kicking down the road as long as they can, because an overnight collapse ain't good. Further reading, the situation at Credit Suisse is dire, so dire that a solution needs to be found before Monday, March 20th, and by now we know that UBS bought them out. The bank cannot survive in its present form. A failure from Credit Suisse would not just rock the Swiss financial system, but several global repercussions. And this is another point. Since it's a dollar-based system around the world, the contagion isn't contained to one little bank in Switzerland. So one little bank in Switzerland has an issue. Banks in the United States have issues because these banks loan to each other all the time, and there's this is why they talk about if one bank falls, then it's a domino like effect because just like in '08, there's so much, or in the crypto crash of 2021, or 2022, all these industry or these banks have money at each other's bank. So all these IOUs are passed from one bank to another. If one bank who had the last IOU fails, then that domino effect continues. A merger with UBS is one solution, but UBS has been bailed out in 2008 and doesn't want to be weakened again by Credit Suisse without state guarantees. And by the way, UBS just came out and got 100 billion franc line of credit from the Swiss government to buy Credit Suisse. Does that inspire confidence that they need this line of credit from the government? Basically, it's like saying we need a line of credit from Infinity Money Printer because we don't know what's on the balance sheet of Credit Suisse. We don't know what we're going to be liable for. Swiss banking system is too big to save, but the Swiss banking system is very unsound, just like the rest of the world. The central bank, which is bigger than the country's GDP, is extremely unsound. The banking system, which is 5x Swiss GDP, makes it too big to save for Switzerland. That doesn't mean the Fed won't come in and help. Although the Fed and ECB are much smaller in relation to their country's GDP than the Swiss National Bank, these two central banks will soon discover that their assets of around 8 trillion each are grossly overvalued. Meaning, the Fed has bonds or treasuries, just like SVB did, and unless they hold them to maturity, they've lost money. Meaning, if they bought bonds in 2021, which they bought a lot of, by the way, if you look at the Fed's balance sheet, they basically financed 2021 and 2022 overspending. They bought a lot of those treasuries at very low interest rates, and now those interest rates have risen. So who's the Fed going to sell those to? They're not. They're not going to sell them to anybody. They're just going to hold them until maturity. And you're going to watch the Fed balance sheet, although they're trying to do quantitative tightening, which is selling off those assets. Who are they going to sell them to? They have to sell them at a loss. And they're going to continually, that balance sheet on the Fed, it might do a little bit of down, but it's just going to continually go up. It's a yo-yo on stairs, right? It can go up a little bit, but or up and down a little bit, but the trajectory is up. 9 trillion, I think, on the Fed's balance sheet right now. Okay. Further reading, with global banking system on the verge of systematic failure, central bankers and banks have been working around the clock this weekend to temporarily avoid the inevitable collapse of the bankrupt financial system. And this is why I know for a fact they're going to change the rules. Because the rules mean that it's going to collapse. What they just did with SVB was against the law. They were supposed to do a bank bail-in from the Dodd-Frank Act in '08. And they just had a tool that they came up with on the fly. And I got to say, Nobody Special did a great video on this this weekend, but something you should consider is unintended consequences. This is why I'm kind of like this long-term investor. It's like, what's the big picture? Fiat's going to fail. Fiat's going to debase. Because you don't know what these central planners are going to do. But one thing's for sure, they don't even know the outcome of what they're going to do. They're central planners. They shoot from the hip. And here's a good example. Janet Yellen and Jerome Powell say they have the tools to deal with this. That's what they often say. However, when something happens like SVB Bank, they have to meet together and come up with a tool. So they obviously didn't have the tool. They had to make it up, right? So that doesn't inspire confidence, number one. And one of the tools they just came up with, and I did a video on this the other day, is that the banks, the big banks, are insured by the federal government. Okay, goody. So their deposits are 100% safe. It doesn't have an FDIC insurance limit. If they are viewed as a systemic risk, then the federal government's got their back. Fine. So let's think about the unintended consequences. If you are a depositor at a regional bank, why would you, in your right mind, keep your money there if you can go to a big bank and get free insurance from big government? You wouldn't. You're kind of dumb. You're not really good at risk management. Therefore, regional banks are going to collapse. Because anybody in their right mind, especially big account holders, people who have over $250,000, which a lot of businesses do because they use it for payroll, etc., they're going to go to the big banks. All right. Unintended consequence number one. Unintended consequence number two. Everyone in Europe who's smart, everyone who has a big business in Europe is also going to do the same thing. They're going to come on over to the United States and invest their money in a big bank because they know they have free insurance, unless the ECB does the same exact thing. What does this do? It creates more demand for dollars because they have to transfer their euro deposits into dollars into US banks. All kinds of unintended consequences because they're meddling in the free market, right? If you understand that we don't live in a free market and that we have central planners who are just trying to put out fires as they come, right? They are playing whack-a-mole. And when they play whack-a-mole and they come out with these new rules, they have massive unintended consequences. And they're not super smart, right? They've been wrong so many times, and yet people look to them as like the shaman who's going to tell them how the financial system is not going to fall apart, but that's not the case. And the more they meddle, this is my opinion, the more they meddle, the more they put their finger on the scales, the more distortions you're going to see. And when they create those distortions, the more they have to come in and meddle. You gotta love it, don't you? All right. Let's see. Biggest money printing in history is coming. This is why I say debasement is 100% certain. Because the one thing that solves this problem for them is more liquidity. You cannot taper a Ponzi. You cannot taper a Ponzi. And the fiat system is debt. It's more debt. A lot of people don't understand that. If you don't believe me, do your own research. But fiat system is debt. So if you have a debt-based monetary system, if your life was a debt-based monetary system, which is you have to take on another credit card to finance the old credit cards, as soon as that gravy train stops, your life falls apart. And what Jerome Powell's trying to do is end that gravy train to stop inflation. But in the scenario I just gave, that's your life falling apart. In the scenario that Jerome Powell's meddling with, that's the US economy. That's the world economy. And it causes massive problems. Furthering, as I pointed out above, the main central banks would also be bankrupt if they valued their assets honestly, mark to market their bonds. The Fed, although they have powers that normal banks don't. They have a wonderful source of money that they will tap to save the system. Yes, I am talking about Burr, the money printer. Okay. Currency debasement is not the cause, but the effect of the banking cabal taking control of the money for their own benefit. As Mayor Amschel Rothschild said in the late 1970s, let me issue and control the nation's money, and I care not who makes the laws. And we're going to see more of that, folks. Here's the thing. I'll wrap up here. This is going kind of long. The government has no money. So, if they need to save the system by injecting money, where do they get it? Printer, which means debasement. Okay. So, I like listening to this stuff. I like paying attention to the details. But if you're one of those people that kind of gets overwhelmed, who is like, man, there's so much information. How do I make the right decision? I like to focus on big picture. Big picture, debasement's 100% certain. So inflation's 100% certain. How fast that happens? I don't know. But I will say that the math is so bad now, the 31 trillion and the number of tax receipts we have and what we spend money on as far as Social Security, Medicare, and Medicaid, that I think it's going to increase, meaning 10, 20, 30% over the next decade plus. The only way they can prevent the system from collapsing is to add in more money. So if you understand that to be true, then you'd understand that your money that you hold today is going to be less valuable tomorrow. So if you're investing, buy things the government can't print more of. The other thing about like the stock market, a lot of these stocks, a lot of these tech companies, they rely on this money printing. They're not actually profitable. So buy things that people need, like um, gold, silver, Bitcoin. I'm a big fan. Real estate and commodities. Commodities have to create a profit, and they sell stuff that people want to buy. It's not just a zombie company that's relying on free, easy, cheap money. Anyways, long video, but my overall point is debasement is certain. Do the math. If you understand that, then you'll buy things the government can't print more of. Let me know what you think in the comments below. I'll see you all in the next one. Peace.